Joining us to discuss BTC price and more is Nick Mancini. He's the Director of Research at Trade the Chain. Nick, great to have you. Great to see you as always. So Bitcoin skyrocketing past $25,000 this morning for the first time since August, before quickly retreating to where we're seeing it right now, just below 25,000. What are some of the catalysts for Bitcoin's rise?
Yes, thank you for having me. So the interesting thing you did note earlier was options as well as equities correlation. So we've definitely decoupled from equities, but I think the interesting thing is more in relation to the dollar rather than equities. So equities have pretty much just formed a range since the start of February. We had a slight swing failure pattern lower below 4,100 for equities futures, and now we're just sitting between 4,100 and 4,160. This is basically a signal to the general risk market that the main market, equities, NASDAQ, as S&P, et cetera, have cooled off, and we're looking at high beta plays, which is both a good sign and a worrisome sign. So if you're looking for high beta plays, that's because risk is risk on and people want to take risks. But on the other hand, if you're looking for that type of cycle, it's typically towards the end of that local bear cycle. So we're seeing Bitcoin jump up to 25K and hover around that level. If we do get above 25K, I do think that 28 to 29K is certainly in the cards. There's a large fair value gap between 25K and 28K. But the big worry right now is with equities flatlining and the dollar also relaxing and everyone focusing on crypto, is this kind of the end of this recent bullish cycle that we've been experiencing since the start of the year? I think people are starting to ask that question, and it's a valid one.
So is this just a bull rally in the middle? Oh, well, is it a rally in a bear market, or are we seeing something more substantial here?
That's also what I'm considering. So based on the price action that we saw from January 1st to now, seems that it's a lot of short squeezes, which means that shorts are basically overplaying their hand. A little bit of spot buys up and you have to close your shorts, which actually forces you to buy Bitcoin, which then increases the price. So as we're washing out all of these shorts from the lows, the question is spot buying at the same pace that perps and other derivatives are buying? The case right now is that is not happening. We're not seeing as much spot buying as we would like in relation to perps and derivatives. And of course, that's another worry for, is 25, more or less a local top, or do we really have the gusto to get up to 28K, which is kind of that next bull target? If you ask me, I'd say we're probably going to consolidate around 25K before that next move, and you're going to see a lot of leverage step in. That leverage may influence the next move.
So who do you think are the buyers right now? Is it institutional or retail?
That's another fascinating question. And I think retail right now is primarily the buyer. What we're seeing from trading volumes and from sentiment indicates that this is very heavily retail driven. Trading volumes are in line with increased prices, right around 50% from the lows for Bitcoin. And we're seeing sentiment very closely tied with Bitcoin price action. So to me, this seems like it's a lot of retail entrants reading the news, getting a little bit excited. We're still yet to see institutions, big fund managers, lots of money flows into Bitcoin. And those that are playing in this market right now are mainly playing with perps and derivatives, meaning they're making short-term bets rather than long-term bets. We have seen some large and old Bitcoin holders start to increase their holdings throughout the bear market, which is very typical for lower price action period or lower price periods in the crypto market. But those are old holders. Those are 2009, 10, 11, 12, 13 guys. And we know the institutional ones are going to be recent buyers since 2017, 2018. So we haven't seen those recent buyers come in, but old buyers are stepping in, as well as retail participants, which forces the question, will this run out before we want that 28K, 29K level, or will we end up getting there with a little bit of institutional interest at this tail end?
Well, right here we're seeing a Bitcoin sentiment chart. Based on that, where are you interpreting the trajectory right now?
So based on current sentiment, if you look at kind of that previous hump that we saw, 3-4 days ago, that was really kind of an entry sentiment. Is, hey, Bitcoin's at the lows. We don't really think it's going to go much lower. All of this nasty, regulation stuff is starting to become a little bit more clear. Binance is working through lawsuits that they have, and some of this stable coin regulation still is going to go through lawsuits and through the legal system. So none of it's immediately applicable. I think the market realized a couple of days ago was a great entry. Now you're seeing increased sentiment near the highs. And I think that's a big signal to say if sentiment and price action are 100% lined up right now, and we're not seeing a lot of institutional interest, it's mostly retail, that's cause for concern on finding that local top. And I think that's, if you are a bull, if you do want to get long, if you do want to buy more, looking at prices right now, I think it's best to, wait a couple hours, wait a couple days, and wait for some consolidation to figure out if institutional buyers and retail buyers want to buy up here or if they want to start selling over the weekend.
And in terms of spot and perpetuals buying, what kind of similarities or differences are you seeing between the two to interpret where price is going?
Yeah, so I think the biggest thing is kind of the quote unquote bottom on options. Right now, you're seeing a lot of interest around that 15K level, indicating that those recent lows that we found, some people are placing bets there, but the bets are kind of near the lows. So that kind of indicates what we would call a synthetic bottom for Bitcoin. Since that interest is mainly around those lows, it does seem that that 15 to 17K level that Bitcoin tagged late in November, December does seem to be at least the local lows. But on the other hand, the lack of derivatives, the lack of spot interest in relation to perps and derivatives is extremely worrying. We know that spot volume is really what pushes momentum and continues it higher. That's what we saw in 2020, 2021. A lot of institutional and retail interest. And now with just retail seemingly focusing on the market, of course, there could be dark pools. There could be some other interest that we don't really know, but both on-chain and from looking at the exchange perspective, it's mainly retail driving this train right now. And until the institutional buyers step in, I would not be comfortable, putting my net worth or putting the vast majority of my money into this market yet. But if equities start to follow this kind of crypto climb, that's showing strength in another high risk market. And I think then you'll see crypto match that energy in continuation.
All right, Nick. Staying cautious. Thanks for your insights. That was Trade the Chain Director of Research, Nick Mancini.